Thanks for joining us for the Purdue University CME Group Ag Economy Barometer February 2025 survey results. I'm James Mintert, Professor Emeritus from the Department of Agricultural Economics here at Purdue University, and I'm going to share with you the highlights from this month's survey. The Ag Economy Barometer Index rose 11 points in February to a reading of 152. That's 37 points higher than the index was back in October. The current condition index jumped 28 points to 137, and that was the primary driver behind the increase in the barometer. That's the highest current condition index we've received since December of 2021. The future expectation index was changed very little this month, reaching 159. That's just 3 points higher than it was a month earlier. The Farm Financial Performance Index was virtually unchanged from a month earlier at a reading of 110, but the index remains 42 points higher than it was compared to September, and up 20 points compared to October. We asked a series of questions this month about policy and what the expectations are among producers for those policy changes. And the first one was, how important is it for you that a new farm bill be passed in 2025? 72% of the respondents in this month's survey said they think the farm bill passage is either important or very important, and actually 47% chose very important. We also asked producers which of the following policies or programs will be most important to their farm in the next 5 years. And it's clear that trade policy is of the utmost importance to farmers, displacing crop insurance as the most important program or policy. This month, 44% of the respondents in the survey chose trade policy as their top issue or concern, followed by 18% who chose crop insurance. Finally, we also asked producers how likely they think it is that U.S. agriculture is at risk of a trade war that results in a significant decrease in U.S. ag exports. And almost half, 48% of producers in this month's survey said they think a trade war is either likely or very likely. Following up on some of the other measures in the barometer, the Farm Capital Investment Index rose to 59 this month. That's the highest reading we've gotten on that investment index since May of 2021. And we did a follow-up and asked producers about their plans for farm machinery purchases in the upcoming year compared to a year ago. There wasn't a change in February versus January, but if you look at the responses the last couple of months compared to the responses we received late last summer and early last fall, the percentage of producers who plan to increase their purchases has doubled from about 5% to 10% in the last couple of surveys. The short-term farmland value expectation index reading at 118 was up 3 points compared to January and up 23 points since reaching its low back in September. And when we looked at the raw responses to the question that index is based on, you can really see the change in attitudes that's taken place. Late last summer, 24% of the respondents in the survey expected to see farmland prices decline over the next 12 months. In February, that was just 14% of the respondents. And on the other side of the coin, last summer, 19% of the producers expected to see farmland values increase over the next 12 months. This month in February, that was up to 32%. That wraps up the highlights from this month's survey. More details are available in the full report on our website, purdue.edu/agbarometer, and you can also get more details on our podcast, Purdue Commercial AgCast, which is available on all the major podcast providers and at purdue.edu/commercialag. On behalf of the Center for Commercial Agriculture, I'm James Mintert. Thanks for joining us.